Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Busy day for the earnings parade. Twitter, Amazon, Google, Intel, Starbucks, McDonald's, just to name a few. We also have GDP at 8:30, a likelihood of an announcement today from Sprint and T-Mobile regarding their long-awaited merger. And we'll answer as many of these earnings questions as we can. Our guest, Tommy Lackey, longtime friend of the program, managing partner and PM at Relativity Capital Advisors. He will join us at 8:35. In the meantime, Joel, what's happening here in the overnight session?
We're trading up 8.5 handles here. 3015 is where you're trading. Your pre-market high comes in at 17 and a quarter. I like that number because Thursday's intraday high 1775. So there's your minor barrier on the upside. On the downside here, mid-range 3010.50. 3011 is your temporary support, and then your pre-market low just below the close at 3006. Your closing price 3006.50. Crude in the green by 44 cents at 56.46. You have gold in the green too by 590 at 1420.60, and silver up 10.9 cents at 16.52. Let's bring in Triple D here, and I think, should we just call this Rant Friday? How you doing, Triple D?
I don't even know what to say. I'm trying to wrap my head around half these earnings reports and wrap my head around all this stuff, and I don't know. I mean, you look here and you got Twitter trading up $1 ahead of the numbers, McDonald's up $3 ahead of the numbers, and they come out and they hit Twitter down 10%. They rally it right back 10% the next minute. I mean, the whipsaw action in these earnings reports is absolutely astonishing. And we've saw it again and again. I mean, we talked about the chop at Facebook going down 5, then up 15, then down 20, then up 10. I mean, the action, I don't remember it being so choppy. And maybe it's because, expectations are higher. We don't know what's happening. Maybe the algos have got it all wrong. And I mean, the algos are throwing away a ton of money like they just did on Twitter, but it's a difficult earnings season to trade.
Well, the Twitter thing, we can explain a little bit. That was just a case of a large discrepancy between the GAAP EPS and the adjusted EPS. So the EPS number that first came out was 5 cents. The estimate was 19 cents. So you see that headline, you think, whoa, big miss. But
yeah, I saw that headline. I thought the same thing.
Right, I saw it too. Adjusted EPS, 20 cents. So they actually beat by a penny. So that takes a little while to dig through in the release. The sales beat as well, and their Q3 guidance was in line with estimates. Everything else, their daily active users and average monetized daily active usage, which that's a new metric. They no longer report MAUs now. They now just report DAUs and monetized DAUs. Those are both up on a year-over-year basis. So
I want to fly back to McDonald's just quickly here. We're going to go back to Twitter. Bring up the tape of McDonald's right now. Somebody's sitting with an iceberg bid at 217.50. They will not let it drop. It wants to go down. They will not let it drop. So now it's starting to actually turn. What I mean by that, we've talked about this before. I mean, these things are getting bullied on the earnings reports to a certain extent too. And whoever is, I don't know who the buyer is at 217.50, but they will not move. So maybe it's just an institution that just wants to buy a pile of stock. Maybe they like the report. Maybe it's somebody trying to just hold the price up. We don't know the intentions behind it. All I get is somebody at 217.50 that will not move. 100 shares was bid there. They had to hit it for 10,000 shares. Finally, they give up and they start going the other way. So now it's up at 218 here again. Now you ran into, looks like an iceberg seller at 218. We'll see, who's bigger. So it's a battle of the icebergs here right now. You can see the iceberg. See 218 going. 100 shares, and it won't move either. So you got a battle of two icebergs right now between 217.50 and 218. The 218 is lost. So now the 218 is gone. So now you can see, now it can start to probably rip higher. The 217.50 was bigger. Now he's bid 218 with an iceberg. So look, 100 shares bid there, 218, holding it up, pushing the price higher. It's amazing how the iceberg orders, that seems to be what matters on a lot of these earnings reports, especially the ones that are wishy-washy. I mean, you've got some reports that are just good, some that are just bad. And then you have some of these that are like, nah, it looks okay. Give us those numbers, Spencer, you know, for McDonald's, because I just analyzed it because I was trading it, and they were okay.
Fine, yeah. The EPS
But
was
not like blowing you away, not disappointing.
It was it was in line. The EPS at $2.05, that was in line with the estimate. Sales 5.34 versus 5.33 billion. Comps up 6.5%. So everything in line.
Wanted to go lower.
Great, nothing bad.
It was trading up 3 points ahead of the number. It dipped a little bit, then it ripped a little bit, then it wanted to go down, and the 217.50 bid was not move. And they were hitting, and then finally they give up. Everybody who wants out gets out, and then it starts to move higher. So it's amazing how much push those icebergs have right now, but we're seeing it again and again. You know, I forget which stock we were talking about the other day, but it was all about the iceberg.
Coke.
It was Coke. It's the same thing at McDonald's. We got an iceberg bidder here. He's now at 218, or she. We don't know if it's a girl or a boy or an algo. We don't know what the deal is, but obviously they're very influential, and they've pushed this price higher here now. So, you know, when the reports are wishy-washy, stock is looking for direction. One buyer can change everything, and it really has. It really did in the case of Coke, and it really has here in the case of McDonald's as well this morning. So McDonald's holding up very well now, for the simple fact that this iceberg buyer will not let it go down.
Okay, all right. I'll just give you. I mean, like it makes any difference here. The initial spike high in Mickey D's came 219.33. That blows away the former old-time high that was made at yesterday, I believe, at 216.26. So if you're looking for any kind of pullback here, get to the top of yesterday. Oh, way to go to top of yesterday's range, 214.44. I don't think we're going to see that. Maybe 220. I mean, if you want half and whole numbers here, 220.
I don't have my. Oh, I do have my book open. Let's go take a look at the book.
It's probably so far above
very
it,
early. It's just very early, so the book does you don't fill up this quickly, you know, because
right.
A lot of institutions aren't even at their desk yet. 23,000, pretty small, but it could be bigger than that. Like we said, it's very early here yet. So.
Okay. All right. So that's and we did. All right. There's Mickey D's. Probably hit 220 here by the end of the show.
217.50 buyer. You know, and you've got to follow the icebergs. If you're trading these on the earnings reports, and you're saying the one issue though is if you're leaning on that iceberg and you're saying, okay, well, I don't think it's moving, then all of a sudden it does move. Now you're looking at a point down because there was selling pressure coming at it. So it's like, how big? How much can that person swallow of this stock? How many shares can they buy? When they hit it, 1, then they hit it for 5,000 and still doesn't move.
There you know.
Telling you, it's like, wow, this is a big fish. So it's, you know, we don't know why they're buying it. We just know they're buying it. And they're concealing their intentions by showing only 100 shares, even though they got a boatload there. And I believe they moved up because that 218, like I said, was getting hit. I haven't paid attention here yet, but they're probably still jacking the bids up. So they are pushing this price higher here right now on Mickey D's.
Dennis, have you considered a career in play-by-play?
I just gave you the play-by-play there on the McDonald's earnings a little bit anyways, and you can see, I mean, it's amazing how influential, like always the icebergs are somewhat influential on earnings because they're looking for direction and stuff. Maybe it's selective perception, but I'm noticing a lot more this earnings season. I'm noticing a lot more push by, you know, one person or one algo really pushing the price around. And it's the reports that are wishy-washy. I mean, there's nothing you can do on an Amazon report when the thing falls 100 points. You know, Google, same story. This report just, you know, they got a huge buyback. Stock just going to really move. But it's the ones that are like, okay, is this good or bad? We don't know. Well, somebody makes a statement, it's good. And I'm going to buy it because it's good and I'm not moving. And then everybody else says, oh, it's good. The media will say, now look at everything they can in the report and analyze, well, it's up $5. Okay, well, why? And now they'll go find the reason in the report. They'll say, oh, well, global sales were really good here. So that's the reason. No, the reason was there was an iceberg buyer that said, no, it's good. I decided it was good, and it moved higher. Crazy, but that's how this market's works. Dude, at 219.40. Look, is he there again? You got a battle. It literally again, it stepped up. It was iceberg again. So this iceberg buyer is still stepping up. still pushing the price higher in Mickey D's. I don't know how many he wants, but he obviously wants more. Maybe he's just massively short and he's trying to get covered and he's scrambling around. We don't know the reason. But right now, that 219.80, it's 219.80. That's an iceberg again buyer. I don't know if it's the same person, but that's the same, or like 100 shares showing. Watch, it gets hit. Now it just moved. So it just got hit. Is it back down to 219.40? Is that another iceberg order there? No. So because it's moving. But you can just see the influence that they have.
Where do those prints go up, Dennis? And I know you're seeing the bids and offers, but Jazz is asking where you see the prints are going up all over the place.
Consolidated tape, you're seeing it.
Right. Okay.
So you're seeing it go by. I'm looking at the quote and seeing 100 shares bid, and then I'm seeing the consolidated tape trade 100, 200, 100, 100, 100, 500. Right. It's not moving. That's telling you that's an iceberg order. We don't know how big it is. It could be 1,000 shares. It could be 10,000 shares. It could be more. I'm telling you, the one that was at 217.50 was huge. So is that person done buying? Because when that person's done buying, that's typically when the stock will start to come back in. But we don't know when that person's done buying. So, it's all speculation. But if you're trading the earnings report and you see 100 shares that will not move, will not budge, a lot of times you'll see that thing, okay, day traders give up and the thing will spin the other way. See, again, 219.50, there's an iceberg buyer there again. 100 shares, just trade 100, trade another 7 on it, trade another 1, 2, not moving, another 1, not moving. So I'm just trying to teach. It's a teaching point.
I got you. No, I got you. I got you. No, that's good.
We're just trying to use it as a teaching point.
Can you see
any exchange? On any exchange.
Can't you see the time and sales through your whatever broker you're using?
Yeah, you'll have time and just open up your time and sales window. You'll be able to see all that stuff. So yeah, bring that up and you can see the stuff that I'm talking about. But that is what moves price when it's a wishy-washy report. It's where is the big guns? Where are the big fish? And if they're identified here, and the day traders start identifying they're here, they take it the other way. And the algos will do that too. I mean, there's algos that are trying to trade this too. So they identify a big fish, they're going to try to push it the other way.
All right. If you're trying to look at what Dennis is talking about,
you're saying, in other words, fake bid. That's not correct. These are real bets. This is a real bid. This person is getting hit. It's not like they're bidding and they're, a fake bid is somebody who's bidding and they don't want to get hit on it. This person is eating that stock. They're saying, I don't care. I'm just buying more. So they're using the power that they have being a huge fish to push the price where they want it to be, maybe. Or maybe they just want stock. We don't know.
Could be short.
Could be bids are real. And they are getting hit. They're more than real because it's showing only 100 share bid. And it's like 10,000 in some cases. So it's even more than real.
All right. Let's cover a few. I know. Let's go with some of the big movers after hours yesterday. Let's go to Amazon.
All right, Amazon here. The
one stock that's red. Joel goes to.
Right. Well, the story is going to be that their margins are compressing as you'd expect when they are trying to incorporate next day delivery into everything. But their Q2 EPS $5.22 versus a $5.58 estimate. Again, with their investing in next day delivery, that's not entirely a surprise. Sales 63.4 for $62.4 billion. So a beat on that number. AWS has a revenue run rate at $33 billion. I had the growth rate in front of me here. 37% growth, which was a miss on the estimate, and a 41% growth that's what it grew to last year. So the growth rate for AWS slowing by 4 percentage points, and that's the story.
I mean, the stock got the beats, has bounced back. I mean, it's a tech stock, so it fits the bill of buy the dip. I mean, I guess you can call it a retailer, but everybody classifies as tech stock. I mean, anything that is in favor, anything that's to be a tech eventually seems to get bought back on bad earnings. If you're non-tech, that's a completely different story. But they're hungry for tech. They're hungry for fangs. Amazon was under $1,900. It's back up to $1,947. It's already got 2/3 of the losses back. Actually, did it go under 1,900?
It did, Dennis. 1899.
I saw it
under that print there, man. It was just moving so fast and moving in like 15, 20 buck
increments. It was literally a 50-point spread, I felt like, on it at one time, right on the report. It was so wide. And it lifted on the report, too. It initially went over 2,000. Right, look at that initial spike. Look at that first candle, which is faded on this chart. But look at that high on that first candle. You were up over 2,000. You were down under 1,900, all within like a minute. That's incredible movement. Incredible movement. 100-point movement in a minute.
105,
105
106,
points moved in a minute
106.
on the number. So you see it down now 26. That's why I'm saying if you have options and you get those orders out there, there's big money there because, let's just say you had the puts, or let's just say you had the calls even, and you were sitting out there, you could be selling the stock against those calls and then throwing a bid out there, a low ball bid, and raking it in on that. Obviously hindsight's 2020, but I'm just saying there's big opportunities to, obviously you have limited risk when you've got the option position already. So why not trade the stock against it? Because it gives you that free ticket basically to trade the stock against those options and take some of this whipsaw action.
Yeah, I'm just trying to see.
It's not a free ticket, it's an expensive ticket, I should say, because you pay a lot for that.
Yeah. You know what, Dennis? That 2005 and 1899, that was on the same bar. That was on the same 1 minute bar.
1890 in 1 minute. It traded on the report from $2,005 down to $1,895. These news algos
99
are just getting the hell chopped out of them. So whoever says that high frequency traders are all geniuses and you can't compete, well, here's some evidence for you. I don't know if this is a high frequency algorithm, but it's probably a news reading algorithm. And I tell you, man, in this earnings season, they have been getting hit. They got hit hard on Twitter. We're going to go that in a second too, because they knocked Twitter down on that headline almost 10%, and it is now up 5%. So cool way to throw away 15%. You know what? I've just seen enough that I don't even think I'm interested in running news algos. Like an algorithm is just going to read the headlines because there's too much interpretation. There's too many other things. I'm more interested in fading the moves off of these things because they read it wrong all the time. It's good news for traders as human beings. You can compete here.
Yeah, there's the Twitter here. What a move in Twitter.
Look at the opening bar for Twitter. And
Yep.
Spencer but we started with Twitter. We didn't really talk about the action, but Spencer gave us the reason because there was some confusion on the headline number. But look at that opening bar. Bring up that chart.
Let's see how long.
First minute. This is incredible movement, guys.
Yeah, I mean, it's almost better just to wait. I mean, you're the champ at interpreting these earnings report and stuff. I'd kind of like to let it settle out, but that had a 1 minute bar from it went 39 and at 60, it went down to 36 and a quarter, and then you were back up.
What is the math on that? 39.60 down to 36 and a quarter. It's a 12% opening bar. The stock price moved 12% in that opening minute after the earnings report. In the 1 minute after the earnings report, probably in the few seconds after the earnings report is most of the movement, it moved 12%. Well, these are incredible moves.
I just Twittered. You had the last earnings report, and it faded off that. Had a nice gap fill. I was talking with Spencer about this. So you basically got a reset from the April 23rd move, and sat there. I think we did talk about it on the show. There, we were talking about under when it was around 35. How you can lean on the low of the move. Now you're back up at the high of the move. This should be interesting. The last time Twitter got up here, you got the 40.92. So let's just call that 41. And they popped it up this morning. They got the 40.98. So there's $41. That's your big level here in Twitter. Currently trading up 213 at 40 and a quarter.
But again, same story is really who is winning on these is the buy the dip. Buy the dip in tech is working again, big time. So you bought that dip, on Facebook the other night, it worked. You buy this dip in Twitter, it worked. You bought the big dip at Amazon, it already worked. I don't know what Google did on its initial numbers. What did Google? I think Google went straight up, did it not? I don't think there was any washiness on Google. What did Google do? I'm pretty sure it went straight
up.
If it went down, I did not. It was in milliseconds because I did not notice. I'm pretty sure Google went straight up.
Yeah, it closed at 11:32.12, and then maybe it had a little bit of a dip here because I don't know if it came out exactly what time, but it had a dip to 11:22 at 16:50, and by 16:30 it hit 12:24. Boy, big buyback there. Are they buying the stock back right now, Dennis? Old 25 billion. Are they sending a market order in pre-market? 1240 is your high there. Got a gap to fill from the last earnings reports of up to 1266.29, but it's already come a long way. Let's see if you can fill that gap from April 29th.
So, Spencer, we can tell I'm wound up already. So continue to go on this merry parade here of tech earnings because they're all interesting.
Oh, Intel? I mean, where would you like to go?
Yeah, go Intel, sure.
So Intel, we talked about this one on the pre-market show. First, I'll give you the numbers from yesterday, and then we can talk about what they said last quarter or the quarter prior. So Intel's Q2 adjusted EPS from yesterday, $1.06 versus an 89-cent estimate. So a nice beat. Sales 16.5 versus 15.67 billion. So they beat on both of the Q2 numbers, and then they raised their full year. They raised their full year sales guide.
What are they doing over there?
$5 billion.
Chopping me up in my long-term portfolio.
Right. So that's what they said yesterday. Rewind the clock back to April 25th, their prior earnings report, where they lowered their Q2 EPS guidance. So the guidance that for the June quarter was a big miss on the estimate, and they lowered their full year EPS guidance. So they lowered it in April and then crushed it in July.
It's absolutely ridiculous. You know, the company is almost like, it's unbelievable. They can say how bad it's going to be, and now they're telling us how good it's going to be 2 months later. Everything changed that much in 2 months, Intel. So anyways, I'm disappointed because I sold my Intel stock. They actually talked about on some other, somebody was talking, they were saying earnings going to be depressed for up to 3 years. Remember they said that?
Yep.
There was some commentary that they were looking, trying to regroup, but it wasn't going to be good. And I was like, okay, well, that's why I'm out. So anyways, I sold at 50. The stock went down to 43. I was pretty happy about that. I never rebought because they told me that wasn't going to be good for a couple of years. Anyways, it was good in 2 months. So obviously should have rebought. Stock is back up here at 55, like nothing ever happened. You basically just can't follow the commentary from the companies. Who knows? I mean, they obviously can't get, they're telling us they lowered guidance for the full year 2 months ago. Now they're raising it. I mean, they can't.
Wow, how can they do that? I mean, that's ridiculous.
Trade their own stock? I don't know. They just obviously don't know how to project their own earnings. They don't know. Maybe they set the bar too low. They got to adjust it back up. I have no idea. But anyways,
56.33.
I got chopped up my long-term portfolio on this one. I guess you just buy them long-term and you forget about them. That's what you got to do. Stop trading the long-term portfolio.
56.33 was the spike, the initial spike on the headline number. 57.23 was the low on the gap down day, or the day before it gapped down. So just call it $57. If you do get up there at major resistance, but it's $2.50 away from there. I don't even think we're going to see the pre-market high in this one, Dennis. The pre-market high comes in at 56.33. I do just kind of hanging on here at 54. Let's bit of buyer here. I don't know if it's an iceberg or whatever, but we've been hanging at 54.40 for a little over an hour. So breaks 54.40, a little bit more downside. I gave you the pre-market high or the after hours high as another potential target on the upside.
Just imagine though, and here's the market coming in a little bit, but just imagine trying to be a fundamental analyst and calling this market, calling these individual moves. It's a difficult job. I mean, just trying to figure out the next move. I mean, analyzing metrics, analyzing numbers, and then you have the Beyond Meat, and it can trade 130. So you have one stock like Beyond Meat that can trade 130 times revenue. And then you have stocks like Gilead that trade 6 times earnings. I mean, obviously there's growth factors involved here, but it's just like there's different measuring sticks for every single stock out there. And depending on your sector, depending on your growth rate, Beyond Meat, they're saying this morning on CNBC, it's worth more than Campbell's soup. It's worth, more than, I forget who else they said. There was another major company that said too. But it's meaningless. I mean, right now it's meaningless because there's a story, there's a short float, the stock's still hot. It's breaking out. I mean, fundamentals are absolutely meaningless on this company, at least at this moment in time. You can't analyze it on any sales metrics or anything like that. You just got to say it's getting the hell squeezed out of it. and we don't know where the top's going to be. We know how these things do end eventually. They end like, the same like as Tilray do. I joked back in the day and saying this could pull a Tilray and go to 300. It still could do that. What the tell was on Beyond Meat, and my failure to identify it earlier, was when we had the blow off top to 200 and we came in down to 140. Then we just hung out. We hung out for too long. We hung out for like a month and didn't go down. And when it didn't go down, it's telling you it wants to go higher, because there was definitely people probably ringing the register saying, okay, the story is over, but it kept drifting up.
Yeah.
And now it's going parabolic again. So now who knows where this top is, but it's going full parabolic here again. I mean, you can analyze whatever numbers you want and say, okay, well, we can project sales growth, we can project this. You're never going to come up to a valuation like, that makes sense on the stock. It's a story stock. So that's not telling you to go out here and short it. Who the hell knows where it goes? It's trading completely off the buzz of Beyond Meat, the buzz of the short squeeze, the buzz of just, nonsense really, but that's what it's trading off of. So you can't analyze it fundamentally right now.
Just wait till their IPO lockup.
Well, you think it's going to come down because of that, but then that's projected. Who knows? I mean, when you look at this thing 2 years from now, I don't think there's any chance in hell it's $239. I think it's probably like $50. But who knows the path to get there? And can you hold through it all? You're probably, if you short it today, you might not be able to get the locate. You might get bought in. So even if you had the money to hold, your broker might not allow you to hold it. So you absolutely is high risk to short it, even though the valuation makes 0 sense, because those buy-ins do happen. Your broker gives you a locate, and all of a sudden they can't locate it. They have to be in compliance with the 2-day settlement, and if they can't find shares to locate, they will go into your account and buy it and force you to buy it. So you can have $1 bazillion and be short 100 shares of this, and it doesn't matter. If they can't find a locate, they will buy you in, and you could be bought in right at the top. That's what happens when floats are short, when small, and you've got short squeezes going on. Definitely buy-ins can happen, and buy-ins can make stocks do absolutely crazy things.
They got earnings on Monday too, so strap your seatbelt on for that one. That should be a wild
I guess
one.
Options. They probably not even enough. Remember the last earnings report, and I was saying they weren't priced enough. They were priced in like a 10% move. Come on, the thing that was a huge moneymaker if you bought those options. I think, like I was saying, you could buy like the 115 calls for like a couple of bucks. It went to 170 on that weekly. So I think they're going to know a little bit better this time. Those market makers are going to price these things differently, but incredible movement there too.
What?
I gotta go. It's GDP coming. So I'll be back in 3-4 minutes.
What's Del Monte? DMP?
Yes.
Because Eric in Google Chat is mentioned.
No, not DMP.
What is it? Help me out, chat. I always ask this. A DPM? Come on, what is Del Monte? Because Eric is making a comment here about, I was talking about there aren't enough peas in the world for Beyond Meat valuations, but I was just thinking about it's not DMP. Are you still there, Spencer?
Yeah, I'm still here. Wait a minute. I'm looking. Wait, it's not. Is it OTC? Is it DMPLF? No. They're
FDP.
Thank you. It's fresh.
Rob Hood. It's moved up a little bit, but not much. It's obviously a dog of dogs. But tell us what's going on here, Spencer, with the GDP number. Oh, it's going to be horrible because we're in an all-out recession here, folks. I don't know if you know it. If you haven't looked at outside your window, we are in a full-blown recession here. So the Fed needs to cut rates. So we'll see what happens here with the number. We sold off here a little bit. Got some nervous Nellies ahead of the number. 17.25 is your pre-market high. I like that level as potential resistance because your intraday high was at that level from yesterday. What I mean by the intraday high for our new listeners is the high between 9:30 a.m. and 4:15 p.m. I track my numbers, my levels off the 24-hour session. So sometimes I get 2 highs of the day, and that was the instance with yesterday. Up 450. What do you got?
GDP is out 2.1% is the reading. 1.8% was the estimate. 3.1% was the reading last quarter. So they beat the estimate here by 0.3 percentage points, 2.1% versus 1.8%. So That's good. I don't think this has any impact on Wednesday's decision, but that's a good read.
Oh, because they're only going to go a half a point now instead of a full point. Spencer, cutting rates. I don't know. I mean, I think you got some crickets here. Dennis is going to be a little disappointed here at the price action. You did sell off. We are hanging out mid-range on the session. So I think it's important for us here to get back over this 1150, 301050. That's mid-range on the session.
DLT
Currently trading below that. So you are getting a little bit of a sell-off here. Gold, what's gold doing? Gold was up, did hit 2120. You got gold selling off a little bit. Gold's flat on the session now. Silver just erased all those gains. Silver has just went negative or just hanging around unchanged on the session. A SPOO's trying to regroup here at mid-range. So I don't know, man. It's not a bad number. I don't think it's going to change actually what the Feds are going to do. I think they'll stick here with the quarter point. But we're just chopping here, chopping in mid-range at the session. Bulls and bears trying to decide what to do here. Pre-market low is just below your closing price. Your close 3006.50. Your pre-market low 3006, and now we're bouncing. Just bouncing a little bit. So keeping an eye. Let's see the closest bracket over 1150, and perhaps we'll be poised to go up and test that pre-market high. Looks like Dennis is still doing some trading here, Spencer, but boy, oh boy, we got some other news and we got some other earnings here. So
yeah, I was going to say, I guess the question is whether you think there will be 2 or 3 rate hikes this year.
Well, I said that it was gonna be like 6.8 and they were going to come out and raise rates immediately, but obviously I was exaggerating here a little bit, but still a good number.
Fed funds futures put 55% chance of at least 2 rate hikes.
And what did Barclays come out and say yesterday?
I said rate hike. I meant rate cut, obviously.
Okay. All right. Just real quick, Beer Guy here is asking me about Avi, and Beer Guy's a good guy, and Avi is just hanging out at the low of the move here. They got punished. Who are they buying? Who's Avi buying? I know they're buying somebody, and it was a big deal.
Well, they just raised their guidance.
Allergan, come on, Allergan.
I'm sorry.
Abby's out, so their earnings beat, the sales beat, but they're raising their guidance significantly here. $8.73 on the low end of the previous range is now $8.82, so a 9-cent raise on the low end of their full year EPS estimate.
You got a big pop here off the number. You got to 69.40, but you're fading. The only thing I'm going to say about this one, and it didn't have the kind of run, but did you see what Triple M did yesterday? Did you see what that stock ended up doing after being up in the
Gave it all back.
Gave all of it. Yeah.
That's terrible tape for it. Terrible.
Absolutely.
Everybody bought that thing up. I think it was 190 in the pre-market. And
got close.
To close that week, rallies to be sold in 3M all day now, I think. That's a better setup than, like obviously you got to give it some room because you fell, 10 points. So it's all there. But you get 183, 184, anything like, maybe get a little relief pop here. I think it's sell all day long because that is a terrible tape. That's a full Boeing. Look at what Boeing did on its earnings. It was well, obviously it came back in, but it's been straight down for 2-3 days. I think at 3M could have I think it's see 170 in the future here.
Yeah, that was just a case of all these people that accumulated the stock here. Instant profit. I mean, how often does it move $11 here? But anyways, I just was talking about the AbbVie, and man, you can hold on to this. I mean, you got a reference point down here at the low of the move, and that was actually made on the day of the takeover Allergan. So 65.06. I just don't like that it's just hanging out here so long, and kind of similar to Oxy did that big deal, and Oxy's just been having a hard time getting off the mat too. So not much I could say there for the Avi, except there was a pop and better hold 65.04. 8:35. What do we got going on here?
Yep. I want to take a quick break and grab today's guest, Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. We'll be right back in a moment here with Tommy. One. Welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick. He's here too. Now joined by Tommy Lackey, as I mentioned, managing partner, portfolio manager, Relativity Capital Advisors. Tommy, long time no speak. How's it going?
Doing great, guys. How are y'all doing this morning? Good to be with you.
We're doing okay. We're doing okay. So you were in our chat earlier. You dropped in some charts. I guess before we get to those individual names, what's on your radar? And how's it going? How have your we haven't spoken in a few months. How have these last few months in the market treated you?
Things have been pretty good. I mean, obviously, it's been a little bit of a roller coaster, I think, for everybody. And I think you really have to step back and see how every time we come off the highs a couple of days or a couple percent, the rhetoric starts getting really heavy really quickly as far as how this is the big one. And I laugh about that because we talk about it a lot when I'm on here, because that's happened now for years, and we still don't have a lot of the underpinnings or the under the hood data out there that says there's some big problem. It's more rhetoric or headline driven at the moment, so you just have to be very nimble.
Well, how do you tell the difference between, headlines and rhetoric and whether there's actually a problem?
Well, I mean, I think it goes to different things. I think a lot of it goes to what it's about and how it really affects things. Again, we talk a lot about how people react quickly, and then eventually the fundamentals come back in, whether that's economic fundamentals or individual company fundamentals, to kind of right the ship. And so, I think last fall was a perfect example that, that one was a lot deeper than a lot of us expected and everything else. However, one of the things we talked about in December and early January was how quickly the breadth had washed out, how it had really gotten to a point to where in October and early November, and especially early December when when they didn't cut rates then and they actually raised rates, everybody just kind of threw in the towel. And it happened so quickly, most people didn't feel like that could be a bottom, but your internals in the market, your breadth and things like that were telling you very likely could be, and that's kind of where we turned out. So same thing now is that, yeah, you can find breadth issues here and there that are showing some short-term weakening, but most of your long-term measures are either fairly strong or have been improving most of this year. And so it's hard to expect a huge rollover, but yet we have to recognize we're in summer, so that's going to lighten up some volumes and things like that, which is going to make these swings a little bit bigger.
All right, you sent over some charts. I want to get to them now, and I'll pull one of them up on the screen here. I like it. You've got a diverse array of sectors here. So we'll start with the first one, the Trade Desk TTD. Show us what this chart is showing, and I can also put it up on my trade station chart if the chart is too small on our screen. But the Trade Desk here, TTD, what's up?
Yeah, on Trade Desk, that's a great example of it's gone through 2 or 3 downgrades over the last couple of weeks and things like that, and this thing just continues to punch around up towards the highs. This is a strong company. It's in a strong weekly trend, as you can see, when you take a glance at the weekly chart on the bottom, and getting ready to break out again. Now, again, it doesn't feel like this is necessarily the most wonderful breakout market when you listen to all the rhetoric, but in reality, 2 of the 3 major indexes I follow just made new highs. So it's kind of hard to say it's not, and that's what typically happens is the markets will kind of make new highs, and then if the participation continues as we've seen, then you start seeing more and more new highs build on that. It's not that once the market makes new highs, then everybody's done. That's just not how it tends to work.
So what should we be taking away from this chart here?
On TTD, I think this is going well, and actually I'm glad you said that, because the other thing I would say is that we do have to be honest on some of these, like this one that's a strong trend, is that we could be in late stage basis. So even with this one, you're looking for the tighter setups. This is a $255 stock, but on this one you could probably put your stop around 238, 239, so we're in that range. And that's really not a big move for a stock this small if you are a position trader. Now, if you're a day trader, you've got to look into, like, say, a 30-minute chart or something like that. And there you can put a stop right now probably just under 250 if this thing starts moving higher. So you can stay pretty tight and things of that sort on this one. But that would be my takeaway. But your RSI on both daily and weekly are just now recresting 60. Both of them are in bull ranges, and both of them are just about, if not already, hitting the nitrous, which is one of the indicators I've used for years to show where a lot of people will say things are overbought. But the reality is when that particular indicator hits, it oftentimes you see acceleration instead of something slowing down.
Explain that nitrous.
It's basically the 9 SMA or 9 simple moving average of the 14-period RSI. It has nothing to do with price. And typically by the time it gets over 60, which is its trigger level, that 60 level, your RSI is probably up in 65, 70 range, and everybody's starting to scream overbought. But if it's pulled that 9 SMA up there for that long and it's starting to move higher, that's usually, or not usually, I would say often. You can't say usually, there are no absolutes or things like that, but often that could be an acceleration point for the stock. And when I see that happening right here as we're on the cusp of the breakout, it tells me if we get that move, it could be a very strong and quick move that could be taken advantage of.
All right, moving on here. TSCO, Tractor Supply, they had earnings yesterday morning, pretty much in line there. Show us what these charts of TSCO are saying.
Well, that's the interesting thing. They're pretty much in line, and they hit it really hard, brought it right back down to some strong volume support around 105, and then by the end of the day, it closes back up almost unchanged. Again, you got to watch this one, and then this one I would look at an intraday chart to where short term, I wouldn't want to see it go under about 108. But again, that's a 3% stop on a $110 stock that showed there was a lot of buying power after they originally hit it yesterday. It's on-balance volume on both daily and weekly are pretty near the highs even after taking the hit for yesterday. And again, it took a hit because it was overall down, but it was down by pennies after being down by almost 6-7%.
ECL here, Ecolab.
Yeah, this is what I wanted to mention. I really love the setup here, but you got to look in the fact it's got earnings coming in a week or so you either got to hedge for that or you got to be looking for a pre-earnings run. But again, this is one that's just tightened up really nice right under that breakout zone. It's building some volume here, which tends to build energy. I like to liken it to the old cartoons where they'd start spinning their legs before they actually start moving. That's what I see these long, tight consolidations as, is them just kind of building up that energy before it kind of hits. And again, you can be real tight on this one and stay under, you could probably put you a stop here under 194. Again, 4% or 2% on almost $200 stock is just not bad at all to be able to give it a shot.
I'm moving quick because I want to get through all of them here. ST Zebra, Constellation Brands.
Again, they had earnings last week. They, did not show much out of those earnings. They're continuing to try to close the last pullback, and they're building the right side of this. But this, again, you went sideways, then you popped up a little bit, you moved sideways again. I just think you got a nice little tight scenario here that you can put it right below the lows of this consolidation. And, pretty much I would go over about 205 would probably be my trigger at this point.
Here's a name that almost never comes up on our show, and it's TDG here.
Yeah. TDG is one that is just a good fundamental name that Joe's put me on years ago, and not years ago, a year or two ago, and in the list now for good strong names out there. But again, you can just look at this on the weekly chart, how tight that is right here at the highs. Hasn't really flinched much over the last month, and it's just really a nice technical setup to where you're pretty tight under about 475. and for a move over 500.
And then Square, a name that we discuss on our show pretty frequently here. This high growth name. I don't know if they've, I don't know what they are, but let's look at when they're.
Earnings are coming up, I believe, next week.
Yeah, I believe.
Within a week or so, earnings are coming up, which I'm fine with because this is, this is a great scenario for a pre-earnings run if it can break this little flag. The sentiment's turned positive on it. It's moved well off the June lows, and it's just stair-stepping. It's running up. It has a 4 to 6 day pullback. It runs up. We're now in about a 7 or 8 day pullback. So if it can break over this, and again, some of these are going to take some market participation. If the Qs get hit real hard for some reason, this one's going to have a harder time moving without a catalyst until those earnings. But I'd be willing to bet you got some pre-earnings eyes on it since it has moved well off those June lows.
Any sort of final thoughts here, Tommy? Anything aside from these names that you're looking at today specifically?
You're watching to see how Amazon comes back based on those earnings because there was really nothing wrong with those earnings. How many times do you see a company with that type of size putting up 30 and 40% earnings growth numbers in multiple segments? I understand we talked about AWS going down a little bit and things like that as far as the earnings growth, but you've got to see that looking at how much more competition there is in cloud and all that now than there was years ago for AWS and all that, but yet they're still putting up 35+% numbers. And then their retail side still putting up 20+% numbers with almost 5% margins. I retweeted someone last night that was talking about that. How many retail players out there have 5+% margins and are putting up 20% growth and then have almost no, they don't really have to carry all those assets on their own books because of all the other sellers.
Hey, Tommy, thanks for coming on. Just one quick question here, a little off subject. Do you have a war story for us? I know you've been in the markets for a while, and on Twitter, everyone talks about all their winning trades, and sometimes we talk about our winners and our losers here. Do you have a good story, a good trading story, something that shaped the trader that you are today that you want to share with our listening audience?
Yeah, I think the thing for me was more the reactionary than anything else, and it learned me to really trust my charts and stay away from all politics and all things like that was after the 2009 downturn. We played it extremely well on the way down, right into the lows, had a lot of great plays. Problem is we did not shift our portfolios back to a growth aspect for almost 4 or 5 months after the bottom, and we kept a very heavily hedged portfolio, things like that actually turned into a net negative. So I'd say if there's anything that was a big surrounding thing that shapes that is that you stick to what you're seeing and not really what you're hearing and all that. I was into a very conservative political type mindset and people, and back then everybody was talking about the fact that the world was really going to end and things like that. And I'll give you the example, and I know it's a much smaller case, but it's part of the reason I performed so well last October through December. Is I lost on the way down in some scenarios and things like that, but into December 26th, we spent a huge amount of time between December 26th and January about 4th just loading back up. Just because of the breadth stuff we saw, the data we were seeing and things like that, saying, we got to trust this data, and even if we're wrong, we're close enough to the bottom, we're not going to get hurt too much from here. It doesn't feel good, it's painful right now, but the reality is that in those very short and panicking area, even a lot of the really, really good professionals are often very wrong because they go much more on the emotion and what they feel like they should be saying.
Tommy, though, and Dennis, just to follow up on that point, how do you know at that point in time, like you're saying, you're close to the bottom? Yeah, you could speculate you're close to the bottom, but what if you get into a scenario where we're looking like financial crisis style, where, okay, we pulled back 15% a week, and now we're going to be down 50% in the next 2 months or 3 months? How do you, what's your contingency plan there if you would have been wrong?
You've got to get out. You've got to be nimble. That was the thing in October and all that. I got to say, I went back in early twice. I went back in and we started coming up a little bit off the lows in October, thinking it was going to be a short and sharp correction, but I got stopped very quickly. I did the same thing again in late November, about a month later, but stopped very quickly.
Still keeping your stops out there.
Yeah, it's making sure that you stay really tight when you're unsure, and then when it does start working, do not bail quickly. Keep rolling yourself up and just bring it through it. Again, that's why when we always talk, I always tell you, I never set targets. I set milestones. And there's just things I want to see, and then I see once it works for me to get to that next level, all that level is for me to see how it acts at that level. It's not I have got to get out here or anything else. It's
Right.
I want to see what the market's telling me, and that's the big thing about technicals, is they basically tell you the emotions of what's going on.
It's a good point to not get out quickly. I think that's what a lot of people do too wrong. I do it wrong all the time there too. I mean, when you are on the right side of the trade, that's the worst thing. Like, you know, you often hear Kramer say on Mad Money, you can't go wrong taking a profit. I think this is a good example of that. You can.
Yeah, absolutely. The other thing I would say is for especially a lot of people, if you're nervous, do partials. Do partials on the way in and do partials on the way out. Put a third in when you're not so sure, and another third if it goes down a little further, another third at the end, and have your hard stop right below that. You know, no one says here you have to go in and out 100%, and doing partials on the way in for some people and partials on the way out for some people can help them mentally manage the trade much easier if they'll open itself up to it.
Tommy Lackey, longtime friend of the show, managing partner and portfolio manager at Relativity Capital Advisors. Tommy, as always, thanks for the time, thanks for the charts, and have a good weekend.
Thanks, guys. Great being with you. We'll look forward to talking with you soon.
All right.
Thanks, Tommy.
All right, 862 here. We are going to bring on Jeremy Newsome from Real Life Trading in a couple of minutes. But before we get to that, do we have any imbalances? And can we squeeze an earnings report or two in?
The imbalances are all mixed again. There hasn't been much action really there. They haven't been significant. Disney had a nice day yesterday. It's got 35,000 shares to buy here as well, just quietly in a not so great tape really from yesterday. The Disney was showing a lot of strength. Ford 264,000 to buy. That's just of interest because it had such a terrible day yesterday. So somebody's saying it's going to bounce back at least a little bit. Bristol Myers 75,000 to buy. It had a really good reversal yesterday off those lows. I mean, I don't know if there was the night before I was on some bad drug news. It was down to 41.5. Now I have 45.5. So now you look at Bristol Myers and thinking, I'll give Spinner some props too because he was talking about buying the dip. I'm not sure if you did, Spinner, but if you did, good job. I did not trade Bristol Myers at all. I've actually got a position on it just versus just versus Celgene there right now, just an arb trade, but that's nothing because that's just arbitrage. So no real position in Bristol Myers.
I'm surprised we didn't talk about Hershey yet today, but Dennis was wowed up about this one on the pre-market show. They confirmed that they are raising prices by about 9%. This follows the 10% increase from Mars the last year, and I think they had hinted at this as well. So candy getting more expensive.
Well, they're going to raise prices 10% across the board. Well, they'll have to remove Hershey's from the CPI index then because we don't allow inflationary products into the CPI. Anyways, that's my rant on that. Complete joke of an index. Anyways, because they take out everything inflationary. Anyways, and we've had Gil Morales, backing that up with data saying, if we calculated inflation the way we did back in 1980, we'd be like 9% a year, which feels more accurate. And here's Hershey raising prices 10%. So, but we don't have inflation, guys.
We have a slowing economy. 153 was your pre-market high in Hershey's. That was a new all-time high. It's been red. It's been green here. I will just keep an eye on that all-time high that was made yesterday at 149.72. Previous day's high, 149.90. So that is there a seller at 150 there, Dennis? Can you see in the book? I know we're trading above it. Yeah,
if we've taken above it, there's going to be nothing there.
Gotcha.
These usually show up when there's obviously something that's hasn't been there for a long time. There's nothing. The book's clear.
Book's clear. Okay.
Clear book.
All right. Before we bring on Jeremy, and before I forget, I mentioned the Beyond Meat lockup expiration. I want to mention that before it leaves my mind. October 29th. Put that in your calendars. That is the end of the lockup period for the Beyond Meat Insider.
October 29th?
October 29th. That's
That's a long ways away.
Yeah, that's what I'm telling you. Put in your calendar.
This just means like this could go up forever.
I'm saying do whatever you have to.
I want to know what Jeremy Newsom's doing with Bristol. With Beyond Meat, because he's actually traded this a few times here. I've been in and out a few times too, but I haven't traded in a long time now. It's above my pay grade at this point in time. And look, there he is.
What's up, guys?
He's here. Good morning.
Are you in Beyond Meat again?
Yeah. Doing the same thing that we talked about last time, man. Just small little tidbits, like Tommy was just talking about partials. Like if you're gonna be in partials, enough to buy
break it out and ride it.
What's that?
It's breaking out and you're riding it up.
Yeah, man. Yep. It was a beautiful gap yesterday.
Jeremy, how you feeling today?
100%, man. 100%.
When did you do the beet juice? Was that yesterday or the day before?
That was Wednesday night.
Wednesday. Yeah. So
beet juice.
Go ahead, Jeremy. It's one I showed Lisa that video, by the way. Go ahead.
I'm not
so
sure.
I had what happened in this is I canceled a trade that would have made me like $1,500, and it would have made me profitable for the day. And so I had a losing day on Tuesday and a losing day on Wednesday. 2 losing days in a row is very rare for me.
So you had to take beet juice.
Yeah, so I had to drink. Oh, it wasn't even beet juice, man. It was raw beets, just grinded in a blender.
Oh my goodness,
bro, terrible. Like no one in this world can like beets. They're just so bad.
Is this supposed to make you feel better? Like, what's the thought process behind eating raw? It
was just punishment, man. It was
punishment.
It was punishment for me not doing what I'm supposed to do. Like my job is to take trades, and it was there. It was on Seattle Genetics, SGEN. Saw it, didn't take it like a giant chicken, and that was my punishment.
Oh man, that's a horrible punishment. I can't imagine. I had a little bit of a rough day yesterday there too. Had a couple of really bad trades. Actually, it wasn't the fact that I lost money on these. It was the fact that I missed a couple of really good opportunities. Maybe I should punish myself with beet juice too.
Do it. I'll send you the video. Let's do it together.
Yeah. It was bad. He was holding on there, and his fiance Ashley was giggling in the background here, so it was pretty funny. But just real quick before we let you go here, Jeremy, before we wrap things up, tell us what you got going on today. This is the last day of your free week, and also what is on your radar.
Yes, a lot of people like trading the markets together in a group environment where everyone's looking and trading and talking and looking at markets. I only do it twice a year. The next time will be in 2020. So this is the last day, your last opportunity to get into the free week of real life trading. We're going to be playing Google bullish, and I'll be looking at some Amazon credit spreads expiring today. Those are the 2 big things on my radar, man. Friday, option expiration Friday with Google, Amazon, and Tesla all moving today. Those 3, today is a day that you could make a lot of money. Don't lose a lot. It's all about risk control. But with Friday, option expiration Friday is my favorite day, man. I love Fridays because these options are so dang cheap.
One day, right?
One day of expiration, yes. I will normally look to buy, like on Google and or Twitter, I'll be buying some out of the money call options most likely, with a nice little gap. They're both gapping very well.
Yeah.
Spend, 50 cents. Buy 10 contracts, control my risk, and if it works, great.
I will concur with this strategy, and it's probably because I just do a lot of other things. I don't focus on the options. But when I was trading options heavily, like going back to like 2007, 2008, when I was really into the options, I would do the same thing. This was like its day of expiration, and back then it was just the monthly. I don't even know if we had weeklies back then. But I think we just started getting weeklies back then. But anyways, I do the same thing. I had a filter running. It would scan for like cheap options. I was calling like nickel and under. And I was looking, and I would sometimes buy them with like 20 minutes to go in the day. And I'd be like, Microsoft would be trading like 129.90, and I'd buy like the 130 call for like a nickel. I got 20 minutes here, but not only that, like I've said before, I also have the after hours session as well. because you can still exercise those options after hours. You can't trade them, but you can sure as hell exercise them until your broker doesn't allow you to go any further. IB will let you exercise till 4:30. So you get that free, after hours. I'm like, even if the options expired, if I had the 1:30 calls, I'd throw out like a 1:30 offer on Microsoft. Somebody lists me in the after hours, boom, I execute my 1:30. I grab 25 cents. So, there was so many different ways to play those nickel options. I love the nickel and under strategy, because if people are willing to write you insurance for a nickel just because there's no time value left, I mean, most of them, 90% of them expire worthless, but all you need is one or two that work out, and that strategy pays for itself. That's a good strategy.
Me and you, let's create a bar called Nickel Option Thursday.
I like that. Nickel Option Thursdays. And even Friday. Even with 20, like I said, I've bought options with 20 minutes to go, man.
Same.
Like, boom, like people saying you were throwing money away. The market maker's saying you're throwing money away because they're selling it to me. Yeah, like, I think there's a shot. I mean, and it's like kind of like lottery tickets. I mean, most of the time the market maker is going to be right, but if you got to feel, okay, well, this thing could have a wicked close. Maybe there's going to be maybe there could be an imbalance. It could be anything that happens.
Absolutely.
So, funny things happen at the close.
I totally 100% agree, man.
I like it when you're paying really cheap prices for options.
Fun stuff. That's it for me, man. I'll be really keeping a close eye on Tesla just in case it breaks lower. I know I'm a bullish on Tesla, but that gap yesterday was insanely bearish. So got to read the tape, right? And Google bullish, Twitter bullish, Amazon bullish to neutral. I'll be doing some option sales and some option purchases today. Let's get in and let's make it happen.
All right. Thanks a lot, Jeremy.
See you guys.
All right, that'll be it for today's show. Thank you to both our guests, Jeremy Newsom and Tommy Lackey. Thanks, of course, to everybody in our chats on YouTube and premarket.benzinga.com. Any questions, comments, concerns, email us, premarket@benzinga.com. Catch our podcast as well, YouTube, iTunes, Soundcloud, Stitcher, TuneIn, Spotify. And please remember that everything on our show is meant to be informational purposes only, not investing or trading advice. That's it. I hope everyone has had a good week. Hope you have a good Friday and a great weekend. We'll be back with you on Monday morning.